Good morning. Good morning. It is Friday, so that means we are doing office hours. We're going to be, let me get this note taker out of here. There we go. So we are live and going to be talking about private money lending, talking about answering questions related to private money lending, and just anything that we can do to be of help to either borrowers who are looking for private capital and want to figure out how to make sure that their deals get approved, or help private money lenders who are looking to stay safe as they lend. So welcome to office hours. Welcome, Lori. And I forget your name. It says strategic housing, though. Kim. Okay, Kim. Awesome. Great to see you. How are you doing?
Good. Thank you. Thank you.
Good.
Yes.
Lori, I know we chatted earlier, I think this week, right? You reached out to me about private money lending, and you're looking at getting into doing some lending.
Yes, I actually started my capital. I shouldn't say raising. The process of getting the capital. I already have some. I was just going for a little bit more money, and now I'm just reaching out to different law firms to tell them that will be quote unquote open for business soon, to go ahead and do the closings there for EMDs and double closes, etc.
Gotcha. So are you in Gator?
Actually, I am not.
Oh, okay.
But I did come. You saw me at the private money conference.
Okay, gotcha.
Yep, and I networked quite a bit there, and I've been like doing my homework just to cover my bases.
Sure.
And networking with Stacy as well. So I'm confident now that once the funding is there, which should be very soon, that I can go ahead in my mind and find out strategically what I'm going to do to begin with, and then graduate from there.
Gotcha. Okay. What are you hoping to do with private capital? Are you looking to fund specific types of deals? What are you what's your aim right now that you're kind of going for?
Well, I'm going for, like I said, for the transactional funding, and then I want to, for lack of better wording, graduate from there, because what I'd like to do is become a lender or a partner on a park or an RV park.
Yeah. Sounds good. Okay.
Or even room rentals, like I see Stacy and them have. So yes.
Okay. Not sure if I know Stacy. Stacy, what's Stacy's last name?
Carpenter.
Yep. Okay. Oh, okay. Yeah. All right, cool. Yeah. So it sounds like you want to do. Sure.
For Lori, when you mean transitional lending, what is that, like earnest money deposits and things like that?
Yes, ma'am. For like wholesalers or whatnot. I actually talked to an attorney yesterday who I actually found in my GREA group, a local real estate investing group, and he does those type of transactions at his firm. So he said I would definitely be somebody that he's interested in doing business with. So yeah, transactional funding, pretty much.
Gotcha.
Okay. Yeah. So that's similar to the Gator.
Yeah.
Yep.
Yeah.
Yep. So double closing and EMD. Yeah. Those are
is that kind of like being like second on it, or what is that? That's like unsecured lending, or
right. So transactional lending is not secured with a lien against a property. It's more secured with the transaction instructions, basically, that you're giving the title company. So EMD, that one's more of a, you have to have an agreement between you and the wholesaler, and you got to be really careful with those, because sometimes there's certain states where it's a mutual release state. There's states where you can release it yourself. There's states where you got to get approval from I think it's a seller that you need to do it. We don't do a lot of EMD just because it's kind of a pain in the butt. But it can be, if you master that, it can be an option to make some decent money. Transactional lending is usually just an escrow agreement and making sure that it's really, really clear where that money is going. But you got to make sure you do that in the right order. So you got to make sure that, you're essentially, you have your A to B portion of the transaction and B to C with, and you got to make sure that the B to C is funded. So,
yep,
yeah,
definitely.
before you send your money.
Yeah.
Yep. Excellent. And then it sounds like you want to jump from transactional up to getting into, partnering and things like that, which is great. We've done some of those deals. We've got actually 4 RV parks that we currently own, and we're
more. See, that's awesome. I actually sorry to interrupt you there. I've been in the mobile home space for 5 years.
Okay.
So I actually already know a lot of park owners.
Nice.
Yeah, so it's kind of like that's a good connection. Actually, one of them I'm actually networking with now. He is a transporter. He owns a dealership, and he's looking for someone like me to help him out with basically getting some homes. He has other lenders as well, but he needed a couple more to join his little thing there. So, and I already knew him. So it's good. I mean, you network, and your network really helps you out there. So
yeah. Okay, cool.
Mm.
Well, I love to hear that. What if any specific questions do you have for us that we could help you out with?
I was thinking of this last night. What you actually said earlier was a good eye opener there about EMDs. I didn't even really realize that, but see, I'm here to learn.
Sure.
Because you want to know what to expect, and because you definitely want to be able to CYA. I guess, let's see. As far as doing the transactional funding, what are the things to look for, like the red flags or what have you, besides what would be in the booklet that they gave out? Because I've been looking at the booklet too from that conference.
Okay. I mean, Eric can probably speak to quite a bit of this. He's done even more transactional lending than I did, but we've done a few, together. I can say one of the biggest ones that you're going to run into is people will call something transactional that is not. That happens all the time. So they'll be like, "Oh, I just need a short transactional lend. It'll be held for 2 weeks." No.
Or even like held for a week. People will be like, "Hey, I need you to fund this property because the lender's taking too long. They're going to need another week. So you fund it, and then a week later, my other lender funds." That's called a very short bridge, where you have way more risk than a true transactional lend.
Right.
Because in that bridge, your money
escrow
goes out onto the streets, is what they call it. It's on the streets. It's not secured in some reputable title company or attorney's escrow account. It's out with the borrower. And if that hard money lender doesn't come and refinance you out, then you have to go get the borrower to pay you back or foreclose on them. That's a whole different level of risk than a transactional fund.
Wow. So I really need to have them explain to me so I can understand what they're actually talking about, as opposed to what I think they're trying to say, right?
Correct. Because they'll use the same words that you're using and mean something different.
So I'll just tell them like you do everything else. Send them the sheet to fill out everything about the deal.
Yeah, but I would also, for transactional, I think it's wise to hop on a phone call with them and grill them. In
Oh,
a nice way,
yes.
grill them. What do you mean by transactional? Tell me how this transaction will work. And if you encounter somebody who's a fast talker who just like rattles off, it's okay
Mhm.
to say you're talking too fast. And like I had to do that with a guy who went and just rattled. And you know, his
Or
whole
talks in
his whole
circles or something.
yeah, his whole game was to just get you to go, "Oh, okay." Like,
Confuse you.
there's people who are professionals at doing that, where they just get you to go, "Oh, yeah, I think understand that," and you really don't understand it. They're just good at manipulating you. So when somebody starts rattling too fast, just say, "No, sorry, slow down. I need you to speak in plain language. Exactly what this transaction is going to do." We had a guy who was going to do like he's like, "Oh, I do a reverse. I do a reverse double close." I'm like,
What the
that
is
sounds
that?
that sounds like cool language, but what the heck does that mean? A reverse double close. And I don't even remember what his weird structure was. It was stupid though. It didn't even make any sense. It was just illogical. It was like you drop your money in and your money will be on the B2C side, and then I will actually already own it, and then then there's like the private money, then there's this lender that's going to cash you out a little later on, and essentially I
Yes.
already own it. I'm like, well, what's the point of me funding your dumb deal if you already own it, you goofball?
Yeah.
Well, see, that's a good FYI.
Yeah.
And you know what? The relatability on this is even though it's kind of different, but it is kind of the same. When I used to get leads for mobile home deals, and people you call them up and then you find out why they're trying to sell their mobile home, and some of it is like it's so like muddy. It's like, no, what do you mean this, that they have to be really clear, because sometimes they will BS the heck out of you, and after a while it just doesn't make sense what they're saying.
Yeah.
You know what I mean? Yeah.
Bottom line
Okay.
is, if a transaction does not make sense to you, if you in your heart do not understand that transaction and it doesn't make sense, it's okay to just tell them, sorry, this transaction doesn't make sense.
Oh, and I will, because
Until
when it comes to
until it
losing your
does,
hide,
I'm not gonna touch it with a 10-foot pole, because people will, yeah, for lack of a better term, BS you
oh
till
yeah,
into submission. So yeah, it needs to make sense. It needs to follow an actual transactional lend. There needs to be a very clear B to C.
mm-hmm.
There needs to be a clear A to B, right?
Mm-hmm.
And then and then you need to have your funds on the B to C side in escrow before you send any money.
That's the
Then,
biggest part right
then you
there.
need to make sure that the title company understands what you're doing.
Oh yeah,
Written down,
definitely.
like write it down. You can make them sign it. Yep, make them
Oh
sign the
wow.
agreement. Like,
I have them
understand
sign an agreement.
how this money is working. That you will not be releasing these funds into the atmosphere.
Gotcha. You mean because of the legalities behind that? If they
Well,
do that?
yeah, but you just want to have the cleanest paper trail possible. So whenever
Oh
I
yeah.
do the closes, I have them sign, like whoever is it Deborah Johnson? Is it Bob Jones? Like whoever, what's their name? What is that person that is responsible for your money to be kept in escrow? I want them signing on the dotted line saying, I take responsibility and I agree that this money will be safe kept in escrow. It's not going to be sent out, and I'm not going to let you send it. I'm not going to do anything until the funds have arrived. So those are basically the two biggest things with double close. You need to make sure that the BC funds have arrived before you provide your AB funds.
Mm-hmm.
And then the other biggest thing is just that the title company or the escrow attorney is, not only are they legitimate, you're 100% sure that you've looked them up, they're not fraudulent in any way, but that they know what they're doing. Because there are several times that have happened to me or colleagues where they were a completely legitimate operation and they didn't mean to do any harm or foul, but they just didn't understand what a double close was. They weren't experienced. So they sent money to the seller before they should have, for example.
Oh no.
So you need to make sure they know what they're doing. And if you're still kind of learning the ropes in transactional funding and double closes,
Mm.
One way that you can make a lot of money and have zero risk and learn a lot at the same time is just work with others. So I would really recommend that you go reach out to wholesalers and people that need transactional funding. And then instead of you risking your own money, send that deal to us, send that deal to Abraham Gray, send that deal to,
Oh, I was planning on doing that. Trust me. I was gonna
Yeah.
actually. I've been reaching out to Stacy, asking her questions. Who else? There's another gentleman in the group. I have his number as well. Yes, I have been asking questions because I want to be close to 100% sure as possible while I'm learning the ropes until I'm ready to fly solo. And even then, I want to double check because you never know, you know?
And Kim, I know you were asking some questions about that. So,
Yeah.
are you understanding when we say A to B, B to C? Does that kind of confuse you, or does that make sense?
The A to B is like, say if someone needs $100,000, so you would put up the $100,000, that's the A to B and then C to D is when the real funding comes in. Is that?
Yeah. So think of it this way: the A to
Okay.
B. A to B is the seller to the person who's acting as the wholesaler. So A is seller selling
Mhm.
to the wholesaler.
Okay,
C is B. And then the wholesaler has another transaction that is B to C. He's now selling it to the final end buyer. That's why
okay,
we say
okay,
transaction funds for the B to C portion need to be in escrow before we send anything. Because it doesn't make
okay,
any sense for me to fund the A to B portion if he doesn't have his end buyer already committed.
okay, okay.
It's a
All right, so,
close in that they're going to close the transaction essentially twice but usually about 24 hours. So
okay,
A to B closes, and that's a certain dollar amount, and then the B to C closes typically for a little more because they got to make a profit, and we got to make a profit off of their profit. And
okay,
so the B to C needs to have funds in, which usually exceed what we're putting in. And that gives
okay,
the wholesaler their profit for finding that end buyer for the seller ultimately. And there's a variety of reasons why you might need to do a double close. Sometimes it's because it's literally been outlawed to do what we know as traditional wholesaling, where they just lock up a property and may or may not have a buyer lined up. And so
mhm,
some states are saying, no, you can't do that anymore. But you can do a
okay,
double close. You have a buyer lined up, so you do a double close and you actually go and close that deal.
okay,
Or it could be a scenario where, maybe it's a rocky relationship with that seller. Sometimes wholesale deals can have kind of that bumpy relationship. It's maybe a stressed out seller or whatever, and you don't know how they're going to react to, like, where is this house ultimately going. So if there's some sort of hesitation, you just, on paper, you buy that house, but then the same day you go and sell it.
Yeah.
okay, okay.
Yes. So Kim, does that make sense on the,
I wouldn't send my money until I know BC has their money there.
Correct.
yeah, Kim, so let me just go over that again because there's a lot of stuff there. Do you understand the ABC or do you want to rehash that?
Yeah, you got the seller and the wholesaler. The wholesaler is the B.
Yep.
And then in the next deal, the wholesaler is the B, but he's actually the seller for C.
Yeah.
Yep.
Yep.
That's
Okay.
exactly right. Like the way that's easy to remember, if you think about like how the alphabet goes, A, B, C in order, that's the order of ownership of the house. So you
Okay.
start with A. Let's say there's Sally. Sally owns a house. She's A. She's the seller. And then there's Bob, the wholesaler for B. So Bob B is going to be the next owner of the house, even though he's only going to own it for an hour, a few minutes, as long as it takes to shuffle the paperwork around. Bob, the wholesaler, is the next owner, B. And then going to the next alphabet, C, that's the end buyer. Let's say Charlie, C, is the end buyer. He gets
Okay.
the house. He's the one that's going to keep that house and do a fix and flip or an Airbnb or a sober living, whatever he's doing. Charlie C is the end buyer that's going to keep that house. So
Okay.
you might see like Sally and Bob have a contract at $300,000, and that transaction has happened. And then Bob B to Charlie C has a contract at like 320,000. So there's a $20,000 difference.
Okay.
That $20,000 difference minus the fees is what Bob is going to get in his pocket for his wholesale fee.
Okay. Okay. And the money, so if I'm giving Bob 300,000, my fees are going to be in that 300,000, correct?
You would usually charge 1 to 2% of that 300,000, so $3,000 to $6,000. So what you would
Okay.
do is you would talk with the attorney, and you would tell them, "Hey, I'm doing this transactional fund. Do you understand how that works? Yes. Can you sign my escrow agreement that I can write up?"
Usually,
you're not
it's usually more than asking, "Do you understand?" It's like, "Can you recite to me in your own words what this
Yes.
transaction is?"
Yep.
People will say, "Oh yeah, I got it. Yeah, we do these all the time. Yeah."
Yeah.
And it's not what you're talking about.
Yeah.
Right.
And actually on that escrow agreement, I put my invoice on there and my wiring instructions and everything. So the escrow agreement states everything. It states that the agreement, I am going to send $300,000 to you, Mr. or Mrs. Attorney. I'm sending $300,000 to you after you have confirmed, only after you have confirmed that you've got the $320,000 from Charlie, right? So Mr. Attorney or Mrs. Attorney, $320,000 from Charlie. They say, "Hey Eric, I got the $320,000," and then we follow the rest of the agreement, which is I send you $300,000, and let's say it's a 2% fee, so that's $6,000. Then the agreement is that you keep that $300,000. And then you do the two transactions as the attorney. You do the transaction to where Sally is no longer the owner, it's Bob, the wholesaler. And then it's no longer Bob, it's Charlie. They do both of those sets of paperwork. And then they have the invoice back to me. So the attorney gets $300,000 from me. They shuffle the papers and do the owner work, the new ownership. And then they wire me back $306,000. So I made $6,000 or 2% profit on that deal.
Right.
Okay. Okay.
That is great information. I tell you, that is so in plain English. I like that.
Yep. We're glad to help. The honest reality of it is, if you can crack the code to finding a lot of those deals, you can make a lot of money. I have made some great money doing this strategy. We've made, there's one deal that was $990K that I did with a partner and me, and it was like $25K total return for just a day or two of having the money out. But the biggest challenge with this whole strategy is just getting a reliable flow of deals. Because if I could get a reliable stream of deals for 2% in one day that were just knock them out, do 5 of them a month, then I would only be doing that. I would not be doing private money, because your money's just going to grow faster if you can do that method. The challenge with that is just finding a lot of good deals. I'm not saying don't do this method. If you ever find one, it's pretty simple and fast money, as long as you're very, very careful and do it correctly. But to do it at a very, very large scale, your margins start to get compressed, because people are realizing that this space is such a simple way to make good money if you're doing it with the right partners. That there's doubleclose.com, there's straight line funding, there's a lot of competition for us. And private money, we want 1 to 2%. Doubleclose.com, straight line funding, a lot of those other places are going to 0.75 to 0.5%. Very, very, very small margins. And I've actually met some other people who are doing double closes for free. They're making nothing on them. The only reason they do that is because they're also, in this back, for example, like to Charlie, let's say Charlie's going to get a hard money loan to fix up the property. They do the double close for free because they're also going to provide the hard money loan, and they're going to make their points and their interest on the hard money loan. So that's just another piece of reality. If you want to make money on double closes, You can make some here and there, and if you start getting a rapport of a lot of people, that's great. But just realize that if you want to do lots and lots of these deals and make a lot of money with it, there is some stiff competition with those bigger players who have lower rates. So you'll have to use your private money angle, which is really similar to any type of private money versus company or institutional money. Like this is me. You got my direct cell phone. You can text me. You can call me. I'm fast. I'm easy to work with. I'm ready to get you your problem solved. It's like we're the white glove service. We're the easy button. That's your argument for somebody to use you instead of doubleclose.com or instead of straight line funding. Because yes, doubleclose.com and straight line funding is going to be super cheap, but they don't even know your name. You're going to call, a secretary's going to answer like, who are you? What's your file number? It's just going to be slower and more hassle to get the deal done.
So basically push personable, more
Yes.
personable.
Yes.
Yeah.
Private money is about relationships.
Yeah.
So Lori, Kim, when you guys are trying to get a double close, you're like, look, this is me. You got my phone. You got my number. You can count on me. I'm ready. I'm your partner. I'm here to get this done. And that's why that's how you can, start to work with that's how and why you should be working with me instead of some company that doesn't have a face or a name or really care about you.
I didn't realize there were other big companies out there doing this. Okay.
Yep. And honestly, if there's a wholesaler, or not even a wholesaler, but like if there's a wholesaling operation that's a lot of people and they're doing 20 deals a month, most of them will not want to use private money. I wish they would. If I could do 20 deals a month on double closes, I would have millions and millions of dollars at this point, just sitting in my bank account from all that money built up. If they're doing a whole lot of volume, then somebody like doubleclose.com or straightlinefunding.com will start to pay more attention to them. And with all those deals closed, they're just going to have to for the lowest fee to keep up all of that operation. So what you'll find is a private money lender doing double closes is that it probably will be the people who are only doing a few deals a year. And for them, it doesn't make sense to go through the stress and the hassle of getting through the corporate wall to
Right.
the straight lines and the double close to the world. But they just want that private money relationship. So
yeah,
Is that how you guys built yourself up to where you're at now? Just personable service, or?
I would say yes. I would say that's, there's several keys to success, but that's one of the biggest ones, because for almost all of the deals that Justin and I have done, somebody probably could have used a different funding source, but we were just faster, easier to work with, had a better relationship with them. So I think that's a huge part of private money and why people pay more for private money than institutional money.
I saw your little ad up there. Yeah, you're pretty cut and dry on what you do now. Because you have to know this. I mean, if you want to get into it and make a name for yourself,
Mm-hmm.
Yep, exactly. It's all about the relationships and private money. That's a really good point. Shamika, am I saying that right? How you doing?
I'm doing well, and you said it perfectly. I'm in a dilemma, so I want to know if you guys have any advice and where to go. I am currently in a project right now. I wanted to do a flip with this particular project. So I did a joint venture with someone, and so we got it up under contract, and we closed on it and stuff. And it's actually up under sub 2. But I've got like 20,000 invested. I need about 30,000 more, and my partner, there has been a disagreement. So it's like we need to figure out what we're going to do, because I don't have enough money to finish the project on my own. So my question is, I really want to finish the project, but I need to refinance it, or because I can get rid of my partner, but I need to get extra money. So I'm not sure exactly what strategy I can use, because I started to refinance it, because it was up under sub 2. So I was going to refinance it and then sell it. It's a great rental property. It is, it's worth 160, it's worth 160 5K. I have it. We got it up under sub 2, and the current loan on it is about $60,000 on it. And so it's a large amount of equity in it. So I'm just kind of think of what are some strategies to get, because I thought about just selling it to one of my own companies and trying to refinance it, do it a wholesaler, or, just kind of flip it, but, get it out the joint and put in another one. But I'm just kind of look at some solutions on how can I do this ethically and still make because it's so much equity in the morning inside of the project.
So do you need to pay the partner off? Like, do you need to pay them money to get them off of it?
Well, yeah, kind of. But I said if I can just go ahead and finish it, that I will pay them on the back end, and they're okay with that. But I just think it's more so of the financial responsibility that they don't want to. They don't want to be part of the financial responsibility anymore.
Oh, yeah, they don't sound like much of an invested partner then, if they're not wanting to continue
No,
to
this will be our last project together.
Got it. Well, what state is this in?
This is in North Carolina.
Okay, nice. Yeah, so basically your dilemma right now is like you're gonna have to pay the partner on the back end a little bit of profit split, but the biggest dilemma right now is you're a little tight on liquidity, on cash, to be able to finish up the renovation to get the 165K value out of it, right?
Correct.
And there's 20K more in renovation that's needed?
It's about 30, yeah.
What would it sell for right now without any more renovation at all?
It's, well, the value it said on Zillow as is, although I did some other comps, it says 130. And I had put it up to do some wholesales, but it was like they only want to offer me like 80 something for it. And it's just not going to cover, I'm not going to make any money off of it if I sell it as is at that rate.
Is it livable condition right now?
No, because we just finished ripping the kitchen out.
Okay. Yeah, because if
Go ahead.
the usual thought that I go through is, like, if it's listed on the MLS on the open market, there's more eyeballs on the MLS than anywhere else, and you typically will get the best market value that you can right there. So I would just kind of weigh those options. Like for example, if you could list it on the MLS right now and get 130K, that would probably be the best option. And you wouldn't even need to do the refinance, because the refinance is going to be time and hassle and fees and points charged. So just put it on the MLS, sell it for 130K, and you get that. If you need to put 30K more in work, and then the price you get on the MLS is only going to go up by 30 or 40K, then it's not even worth it to do that work. It's not worth the hassle, the time, the expense. So, yeah,
Okay.
I would only do rehab on a property if I'm going to sell it, if I know that the rehab that I'm going to do, that money I'm going to put in, is going to get a much bigger return on the other end. Like if I put in 30K of work and all that hassle and time and stuff, I better be getting 60K or more on a higher sales price to justify all that work and hassle.
Okay. So if I'm hearing you correctly, it's better to talk to a realtor, see if they can market it for 130 and get it out. If they offer me because that's just what Zillow, that's not talking to a professional, and you know how inaccurate that could be. So talk to professionals, see what they can list it for, and if I can get it out. And if not, then go the other route that I would take, because if I can go the other route and put 30K in and make the full 65, it's worth it.
Yep, that makes sense.
Okay.
And I would talk with like 5 to 6 different realtors, not just one. If you have access to AI, it can actually be better than you think to go to like ChatGPT or Gemini and say like, hey, look through all the realtors in my area. look at their reviews, look at their ratings, look at the amount of homes they've sold, be very, very critical, and find me the top 5 realtors in my specific little city. Take that list of 5, call all of them, interview all of them, see which ones you think are going to be the best at not only selling the home, but giving you the most time and attention and help to get it through. And then with that, like, find the rock star, find your rock star realtor, and then he or she should be able to guide you and say, like, yes, you can get 130K as is right now, or it's going to be really hard to sell this as is right now. You should put another 10, 20, 30K, whatever that is, to get the 165K. But yeah, they should be able to guide you on that.
Okay, awesome. Thank you.
Yep, you're welcome.
All right. We've got, I don't know if I'm going to say this right. Mazuza Ventures. I see you've got your hand up.
Hi, how are you? It's Michelle.
Hi, Michelle.
I don't know why that popped up that way, but
I don't know.
anyways, I just wanted to say thank you, Eric, because I was able to get all the JWB, and I believe that I am going to be able to sell the heavy weight that's tied around my neck. So
Amazing.
thank you for that. And I just felt like it was very inspirational. So thank you, Justin and Eric, for hosting and giving me encouragement and inspiration to be able to successfully flow forward, which was super helpful to hear your thoughts on that, Eric, because I was like, I don't know that this is ever going to so I'm thankful that, yeah, I'm moving in a better direction. And then, well, obviously I still have to sell it, right? Like, it's that whole bummer part, but it will be good in the long term. And this is what I'm looking at. And I also found an OPM. So I'm done. As he said to me, Michelle, you have found every landmine there is, and you've stepped on all of them. And I'm like, oh, thank you for seeing this, because this is how I feel. I'm glad it's reality, because it has not been smooth. And so he's gonna lead the way, and he sees where I've been and what my value is and what I want to bring, and he is looking forward to working with me. And so he is really good at underwriting and has his own skill sets. So thank you. Appreciate you guys.
Welcome.
That's good.
You're welcome. Wait to hear this. Yeah, I've stepped on plenty of landmines myself, made a lot of money, lost a lot of money. I've been through a lot. So I'm glad to hear that. I'm glad to hear that you said that. Thank you, Michelle.
Thank you.
Simon, how you doing?
Oh, afternoon. How you doing?
Doing great.
Great.
Can you hear me?
Yes.
Yes.
Bit of advice on what's the thing with second position loans now?
Uh-oh. Let's talk about it.
it.
Run
Yeah.
the other direction.
I will.
Yeah.
I will speak up. Second position is very, very high risk. And I feel like, I mean, there's definitely people with lots of experience that will go into second position because there is that taste for red meat, like where you could potentially make a lot more money. I would never go into second position without, a fairly significant return and a lot of security. And, it needs to be both. Like, you need a higher return and security. A lot of times you're promised a high return with no security. And so, or sometimes you're offered no security and like principally no return, you know, like for the amount of risk you're putting out there. I see people offering 12% annualized a lot to people in second position, where it's a, you know, maybe it's a buy and hold deal. And, you know, I mean, in that scenario, I think I'd rather be in an equity partnership, but that's also carries its own risks. So, but yeah, it sounds like you've got something more specific on your mind there too.
Yeah. What about controlling the deal? Here's the thing, right? I've had someone come to me, and they've got hard money in for purchase price and for the renovation, and they basically asked me would I fill the gap, but the hard money obviously wants to go in at first position.
Yeah, don't do it.
Don't do it.
I've done that before. I've done a lot of second position money, and I've made a lot of money, over $100,000 on just one loan where I lended, like it was 400K that I lended, but it's a huge risk.
What about controlling the deal?
What was that?
What about controlling the deal? In terms of, yeah, we understand that the actual points and a few interest payments. But what if I turn around and say, right, I'll come in on there in second position, because you can rely on the actual first position, because they're there, and the deal is kind of a deal. They wouldn't loan in first position unless the deal was right. But if I went in there and said, right, okay, I want to loan the gap money, right, but I want to basically I can be in second position, but I want to bring my contractor in to do the actual rehab, and I control it that way, and the drawdown. Is that a way to do it or not?
It's a very, very messy and very, very risky way to do it. I have done second position loans behind a hard money lender, so let me unpack a little bit of that thinking, if you will. First of all, a hard money lender will lend just the right amount to be safe and secure.
Yeah.
If they lend too little, they're leaving money on the table. If they lend too much, then they're putting themselves at risk. So they know their market, they know their balance, they know exactly how much to lend. And just because a hard money lender says it's good doesn't mean it's a good deal. I've had deals where it was a crappy deal because I didn't comp it right, and it was my mistake. This is several years ago. The hard money lender still funded it. They just funded a little bit lower and made me come with more skin in the game. And that was my mistake, that I should have saw that as a red flag. So hard money lenders fund deals all the time that are terrible deals where people aren't going to make money. They just made sure that they were secure. So that's the first point. Don't think that it's a good deal. Number two, it's a second position deal. You don't want to be doing this with, I know one lender that doesn't do it unless he really knows and trusts the people. Like, who are you loaning this money to in second position? Would you trust them with the keys to your house, with your credit card, with your family? Like, do you know them that well that you would trust them? If you don't, then you probably shouldn't be doing it in second. And again, if you want that much control over the deal to kind of de-risk it, then this should not be a second position loan. It doesn't make any sense as a second position loan. They're asking you to take way too much risk and way too much hassle. You should be buying it. It should be your deal, and you are the buyer. You are the owner of this house. You are in control. You are signed up with a hard money lender, and you make sure that the hard money lender gets paid on time every month so that the first position doesn't foreclose. And then this partner gets a wholesale fee, gets a split of the profit at the end. They get a little kicker, like whatever, but you are bringing the biggest risk to the deal. You're bringing your hard-earned capital that is at a strong risk. Like, if they file bankruptcy, second position liens can get wiped away. If there's a lawsuit, second position liens can get wiped away. If the first doesn't get paid because the deal starts going longer and longer because the market's not so hot right now, it gets cold, then someone's gonna have to keep forking out that monthly payment. I'm forking out a $3,000 monthly payment on 2 different deals right now that were bad flips from a while ago. Like, how long do you want to be doing that if you get stuck with this kind of property, right? Like, you should be the owner, so you don't even have to foreclose or play games with, like, trying to argue who signs the operating agreement on the LLC and who owns it. It should just be in your LLC because you're taking all this risk with a hard money on a flip. So you need to be the actual owner and the buyer. not the second position lender. Trust me, it's so much cleaner and easier and better that way. You'll be happy that you did it that way.
Yeah, I'm going along those lines, but they don't seem to want to allow me in like that. And I said, well, you know,
Yeah,
the risk is there.
tell them goodbye. Well, like, sorry, like you're asking me to take an unreasonable amount of risk. Like, goodbye.
Yeah.
Yeah. Thanks.
We are actually in the process of foreclosing on a couple of guys who borrowed from us in first position, so we're good. But they raised tons of capital. Tons
18
of
properties.
18 properties. They have second position liens on all of those properties, and all those properties are going to liquidation right now. Those
Wow.
second position lien holders are probably not going to get anything.
And some of them didn't even get a lien. Some of them were like,
yeah,
I want more control. So then they went on the LLC. And what on earth does that even mean? It's a Microsoft Word document that says operating agreement for blah, blah, blah LLC that they signed. And now they're trying to argue with the attorneys that like, well, I have rights to this LLC. It's a mess. They're not even recorded on title as secured. All of those second position lien holders are losing their money. Everybody is losing money. We're the only ones out of those, you know, I can't verify this directly because I don't know the other situation on the 17 other homes, but one of the people connected in all of this mess told me that we are the only private lenders out of all of those 18 homes who are secured by a property and are going to get their money back. All the other private money lenders are losing their money. And that's because they were in second.
All right. Okay. Well, listen, I appreciate your time and your analogy and information. Thanks.
Yeah. Thanks, Simon. Michelle, how you doing?
Okay, so that reminds me of another one that I'm working on. So there is a group of us that are in Jacksonville, invested in Jacksonville, that are in co-living properties that are with a certain person that I could probably share that name when we're not on here. But I don't want to necessarily destroy someone's credit without, whatever, like that's not my point. And so there's like the title company realized how many people were in a bad situation. And so the title company was the attorney for the title company was going to the attorney for the foreclosure attorney to talk to like his friend about everything. And I have like insurance, I have like all the paperwork. I have a lot of the paperwork, but I'm a little confused because it is a sub 2 deal. And then I'm confused, right? Because if you have all the paperwork, if everything is there, and I feel like if I mentioned the players in this situation, I know that Chris and Justin and yourself, Eric, would know exactly who I was talking about. So that's kind of why I don't want to like bring that piece up. But I guess my question is like, so if I have the insurance and I have all the paperwork and everything is there, how do I get that back how do I get my money back? One is an idea. How do I get my money back? Okay. 2, it's not just my situation, right? Because I just told you there's a whole bunch of people that are in this. So I know a couple of people that are buying co-living in Jacksonville. And part of the problem of the person that was like the foundation person in this, maybe, I don't know how you say that, but anyways, part of his challenge is that I think he didn't have PMLs coming in to turn over the PMLs that were already there. But I feel like I know people that are like legit people that, again, you'd probably know who they were if I said their names, that would be willing to buy the stuff. And so what I'm looking at when I'm looking at this, I'm like, oh, like this could be a really great deal for people that want co-living sub 2 deals. And this could be a really great deal for those that did the sub 2 deals. And this could be a really great deal for those that want to get out of the sub 2 deals. So I'm like looking at it going, I see this, but like I'm so new that I'm not sure that I'm understanding everything completely, like what I might be missing. Does that make sense? Because I feel like the person that got me into the paperwork is super legit. And if I said who it was, like you'd be like, oh, that person's legit. And they are, and they have been, which is why I feel okay with the paperwork, but I don't understand the paperwork because I can't be taking back that property in foreclosure on a sub 2 deal, right?
If you have a lien on it, you could, but it's yeah, there's a lot of complicated things on there. I mean, like if you're a second position lien, then you can absolutely foreclose on a property, but you're not foreclosing to become the, you know, the owner of the property free and clear. Obviously, the first position lien still exists.
Yeah.
So if you're a second position lien holder foreclosing, then you will just basically inherit the property, and then you're subject to paying off that first lien. And this is Jacksonville, Florida, right?
Yeah.
So Florida's got a very, very long foreclosure process. It's very, very complex. Judicial could take over a year. I would not go through foreclosure if there was any other possible way for you to just gain control of the property without the foreclosure. So if you could get a deed in lieu with a clean title policy besides that first position sub 2, or, you know, any other controlling way to do it, like that's the way to do it besides the foreclosure in Florida.
Let me ask you.
Well,
this.
and I feel
Let me ask
like
you this
the
though first,
bridge.
Michelle. Let me ask you this, because this is something I'm not sure I'm clear on. Is the property performing right now? Like,
Well, it was paying something. I don't know who. I don't know what, because again, I was kind of new getting into this. But something was paying myself until May, when I said I didn't want to renew in that time. But then a bunch of other people said that too. And I feel like the pain point is that the person that had these properties has a bad rep out there. So like I know that, I don't know if you know this, but there's like some sort of Facebook avoid scams or some.
oh yeah, no, I'm familiar with it. Yep.
Yeah, and so his name has been on there, right? So
Sure.
like I don't think people are gonna re-up with him because his name has already been through the trash.
Yeah.
But I know other people that are wanting to get into co-living. And so it would be an opportunity for him to be able to possibly, because I'm still in communication kind of a little bit with him, more so with his AI, but I have 2 other people that are talking with him and they're kind of connected and blah, blah, blah. So I think if I could encourage and maybe find some positive solutions for the whole thing, that maybe it doesn't, maybe it could be like an in lieu of, or it could like be a go giver positive.
I think you might be onto something there, Michelle, in that you're probably one of your better bets to actually get something better situation would be for this person to be able to sell it to somebody who's actually a reputable operator. That doesn't necessarily mean that you're going to be able to get out of the deal unless they can find a private money lender to go and literally replace you. That's the problem with these sub 2 deals, though. Where, you know, you put in a second position and the cash flow itself can't possibly pay out that second position person. So there really is only one strategy, and that is to quote unquote refinance with another private money lender, and then they just have to keep doing that literally every single year. And at some point, you know, I mean, you got to be literally raising money constantly to go and find another private money lender and another one to go and cash you out, because there isn't any other viable exit strategy other than pay down. I don't know why more of these aren't just structured as, like, if you literally want to be a great operator and you just want to like structure this, you know, with somebody in it, then that person should just know they need to stay in the deal for the long haul as a partner. Like, that's a better choice. I just know that a lot of people don't want to give up, a lot of their cash flow, but at the end of the day, they have to give up cash flow for all these private money lenders, So, I mean, why not just structure somebody in the deal, give them some of the tax benefits then too, and just grow with them? Like, I think a partnership structure would make a lot more sense to be taking on a lot of these sub 2 properties like that. I mean, they're creative, they're interesting deals, and if they cash flow, it's great. But the problem is there is no other viable pathway to getting your second position lender made whole than to keep raising capital over and over and over again, unless I'm missing something.
Well, I just feel like I'm not doing sub 2s anymore at this point.
No.
I've like done 2 different ones. One with Carrie Duragon that was an absolute crap hole, and she's absolutely probably going to be in prison. But the other one is this particular person. Like I feel like he just has gotten into a predicament, and
Yep.
I don't know. So I'm glad you're encouraging that. Yes, I'm not off my rocker thinking there's like a way to resolve this.
No, there might be
And
a way, but it's going to need to be somebody who's reputable, who is actually doing a good job with this, which is hard to tell sometimes, who's actually doing a great job of this or not. You never know who's suffering in silence as a second position lender on some of these deals. And it appears to be a great operator until you really get into the inner workings. So I would do your due diligence on that person, but
I was gonna talk to her this week. Well, actually, I'm talking to 2 ladies this week, both kind of looking in this direction. And then I was thinking about going to the title company and sharing with the title company after I talk to them to make sure that this is something they would be interested in, then go talk to the title company to see if there's a way to work it out so that everybody, again, it's kind of like, how does everybody win? How does everybody get into a positive position?
Well, I think the existing operator wins by getting relieved of the problem that he's got for himself right now, which is that he owes you and he owes a sub 2. And likely what happened is he probably has lots and lots and lots of second position private money lenders. And a few of them said, no, I don't want to renew. So you got to pay me back. Well, how else is he going to pay him back? He's going to figure out some creative way to pay them back. And so if he starts diverting the money that he's got coming in to paying them off, well, he can't pay you. And then of course it just becomes a snowball. Right. Because of course you're like, well, heck, I'm not going to go and re-up with you too. Like, no, I don't want to do that. I'm not getting paid.
Yep, exactly. Michelle, do you have my number?
I don't know that I do. Hold on. I don't know that I do. I will add it. Hold on.
Yeah, we can talk offline a little bit more about this to try and sort that out. I can put it in the chat. Is anybody here? I think
well, you can. I mean, it's up to you. If you want it in the chat, or you can tell me I was right. But
yeah, it's in the Google Meet chat. So anybody here who wants it, is there. We can talk more about this. Send me a text so that I've got yours as well.
Sure.
And then we'll talk about this when we hop off here.
Yeah, because I mean, again, I don't think that anyone was completely ill-willed.
Sure.
I just think it became a predicament.
I think there's a lot of people in sub 2 who absolutely are not ill-willed. They just get in and they go and set up those second liens, and then they really don't have a great exit strategy for getting out. And it's a very tough thing to be able to exit. The only viable path I know of is to literally keep refinancing over and over and over again and raising capital. If you run out of options there and your second position lender gets done with you, you're kind of toast. But yeah. How you doing?
Well,
Chris?
and it's kind of, I mean, it's sad and unfortunate that I do have money that's stuck in there. But like I mentioned at the beginning of the call, like I have an OPM now, so things will be turning around. So I'm just kind of trying to resolve those kinks that are there. So anyways, thanks.
Totally get it. No problem. Thanks, Michelle. Chris, how you doing? Good to see you on here.
Hey guys. Been a minute. How you doing, Luke?
Yeah.
Or Eric? I'm sorry. Good to see you again, man. And then well, I guess I could just talk to you a little not too long ago, Justin.
Yeah.
yeah, I've got a meeting here well, I can be a couple minutes late. I'll just jump on there. I think I'm waiting for a call anyway, but anyhow, had another opportunity. I sent you a follow-up text on that one, Justin, too. I don't know if you saw that or if that even mattered, but got another one that is, it's a first position situation. I kind of just put a brief in the side chat there. I didn't know if you're going to have a chance to get to me, but it's only 45 days, but it is 6 million. So I'm trying to find somebody who might have an opportunity to do that. Trying to get into another deal with the same guy, but it's a second lien position at 2.15 million, but it's only 2 weeks because the house is 95% done. And it's basically one of those situations where a flipper had the property, got through a certain amount, ended up getting into a divorce situation, and so he had to kind of jump out of it.
Yeah, second position will be super messy, but with the limited time we got, let's talk about this first position one. What's going on with it? What state? What's the story?
It's in Texas. It's basically these guys are buying 22,000 acres, but the 6 million is going to be leaned against 1,000 acres, so that way they can provide 50% LTV. And the 1,000 acres, they on average go for 12,000 an acre. And let's see, I just recently got the package on it because I just got this yesterday, so I'm just kind of just putting it in your ear right now. They're going through Vanguard Title, so at least it's a reputable title company. CPS Energy is going to be their exit strategy. So basically, what this is for, it's for a major solar field project that's going to be providing energy for Starlink, Oracle, Google, down in that area where everybody's moving into. They've already got 22 miles worth of transmission lines installed as far as infrastructure, but they're basically just looking for 45 days, mainly just to make the transaction happen before they exit. And so it's pretty simplistic. Like I said, I just got the package, so I still need to go through it and everything. So I don't know if it's something of interest or not, but I just thought I'd throw it out at you, see what your thoughts were.
Yeah, I mean, a first position lien on a bunch of land is possible, and it's possible at that value. We would just have to be really, really careful with the comps, and with that much land, like were those smaller acreages that we're selling for that amount and all that kind of stuff. But
Exactly.
if the valuation is just cut and dry, it's worth double, then yeah, it's definitely possible for us to do that.
Yeah, I haven't even had a chance to get on the phone with a broker or anything like that yet. You know what I mean? To start going over comps on that type of land. They do have a broker that works for them. That I don't know if they gave them a BPO or not, but like I said, it's fresh, so I still got to do some digging. But other than that, it could be very favorable, because there could be it could be a combination. It could be a percentage return. It could be a combination percentage in equity. I mean, there could be. It's probably negotiable at this point. So it's that fresh. And so he wanted me to come back to him with some kind of offer. And so that's why I felt, well, this could be fun. This could be interesting.
Yeah, we can check out the package when you get it.
Okay. All right. Then I guess I'll just hit you up, Justin. Are you still down south, Eric?
I'm in Brazil. Yep.
Yeah.
Okay. Cool. I just didn't know if you were bouncing back and forth or if you just.
Well, I am back in the U.S. for real estate meetups and events and stuff too. I go back quite a bit.
Okay.
I
Cool.
apologize about not seeing that text, Chris. It got buried some deep in my text there, so I
No, it's
just shot you out.
not a surprise.
My
Okay. Either way, I'll chat with you and then we'll chat about all that stuff. So.
All right.
Okay.
Sounds
Sounds
good.
good. Yeah.
All right.
Thanks.
Appreciate you guys. Good seeing you guys.
Yep.
All right.
Appreciate you
Talk
too.
soon.
Yep. And this office hours went a little bit longer, but that's great. We had a lot of good discussions. So thank you so much, everybody, for hopping on. I hope you guys have a fantastic weekend.
Take care.